Okay, so good evening. This is Professor Mayer, and this is our sixth chat session. It seems like we are moving through this material relatively quickly, but this is our sixth chat session, and we're going to be talking about audit sampling. Let's talk about what I consider to be just a very interesting topic, and this topic is related to sampling. I think I actually posted a lecture that I did related to sampling. If I haven't yet, I will post it. But one of the interesting things is on external auditing, we basically have the same type of sampling issues that we do in internal auditing. So it's the same basic stuff, same basic concepts, and I think that once you understand the concepts, you'll be able to maneuver through the system. I'll spend just a few minutes also talking about the ACL and how we can actually use this as part of one of our tools in terms of defining sample size and so forth. But the idea is at this point, what we want to do is want to really talk about sampling from the perspective of understanding some very, very basic concepts. Okay, so that's really the goal, and we're focusing on, what is it, chapter 11, I think, 11 related to sampling. Some of the stuff is going to come in from the book, some of it is my own notes, but I think what you'll see is that we have a sort of a very good summary of what you need to know specifically related to sampling. Okay, so continuing on here, the first thing that we need to understand is this whole concept of sampling risk. Now, the book is talking about sampling risk on page 11.2, and let's just talk about this in terms of why do we have risk? Well, we have risk in sampling because we are looking at only a sample of the population and not the complete population. No matter what we're doing, is we're only looking at a sample. Now, because we're only looking at a sample, the issue then becomes is, well, what are the risks related to this? Well, the risks related to this are these two types of risks. So the first risk is what we call the type 1 risk, which is the risk of incorrect rejection. So if we're testing internal controls, and we'll talk about internal controls from the attribute perspective, it's the risk that a sample supports the conclusion that the controls are not working effectively when in fact they are working effectively. In substantive procedures, it is the risk that the sample indicates that the recorded balance is materially misstated when in fact it is not materially misstated. So what we're looking at here is we're actually looking at sampling risk from the perspective of external auditors, but in fact we have the same issue. We have absolutely the same issue from an internal audit perspective, and what we're saying here is, again, we're looking at a sample, and the reason we're looking at a sample is because we don't have the time, we don't have resources to look at every transaction. What we're looking at is we're looking at a sample, and from the sample is we are determining internal controls, or we're measuring misstatement, whatever it is. But the issue becomes is it's possible that we may say that things are not working correctly when in fact they are. It's also possible in a type 2 event that things may in fact not be working correctly, but we are saying that they are. Okay, so in a type 2, in the test of controls, it's the risk that the audit sample supports a conclusion that controls are operating effectively when in fact in reality they are not. So from a substantive procedure, a type 2 error is when we're saying that there are no material errors in this account balance when in fact there is something that is of materiality. When we are managing sample risk, we're managing it from these three different perspectives. And we need to understand these three different perspectives from a couple of different ways, okay? So the first is the desired level of assurance or the confidence level. The next is the acceptable defective rate or the tolerable error rate. And the third is the historic defective rate, okay? So when we're looking at this, is the confidence level is the complement of sampling risk. So what we're saying, and we talked about sampling risk a few minutes ago, is sampling risk is the risk related to the sample mimicking or not mimicking the entire population. So if we have a sampling risk of 5%, what this is saying is that we have a confidence level of 95%. Now, from an internal audit perspective, is we generally use a 95% confidence level when we are picking our sample, okay? So, the terminology used by auditors is based upon confidence level, and the confidence level is, again, the complement of the sampling risk. But the idea is the two together are going to be the 100%. Now what we're talking about are these two areas, is what we can tolerate and what we can expect, okay? So the idea is that if the two items are farther apart, if we can tolerate, let's say, a 10% error rate, when in fact we're only expecting a 2%, well, that precision is 8%, 7%, whatever, and because that's so large, what it means is that we are going to have a smaller sample. When these two become closer together, the sample size increases. The one book, and I love this illustration, is it gives the illustration from the perspective of an apple inspector. So the idea is the apple inspector inspects apples. Okay, so apples come off the tree, and he is inspecting a sample of these apples as they're going into the carts and being shipped off. Well, generally speaking, the customers can tolerate an error rate related to their apples of 10%. Okay, and when the weather is good, the error rate is 2%. So you have that 8% gap, and in that 8% gap, it means that we're not really going to be inspecting a lot of apples. However, let's say in the one season that there is weather that's not conducive for apple growth, and the error rate for the apples is now 8%. Well, customers can still tolerate a 10%, but you notice how the expected error rate is so much greater than the tolerable, or so much closer to the tolerable level. What this means is that we're going to have to increase the sample size so that we can actually get this level of precision that we're talking about. Okay, and in that regard, what I want to do is I want to take us to the ACL program. Okay, so hopefully everybody sees the ACL program here. And this is something that you actually see in your in the information that you have related to your book. But in any event, I just want to sort of show you how this works. So what we have is we actually have let me just see how many items that we have here. We have 152 items, okay, but I'm not really necessarily interested in these items. What I want to do is I want to go to the sampling, and I want to calculate a sample size. So we're really talking about a record, okay? So in this record is, again, we generally expect to see a 95% confidence level. This is very typical for auditors. And let's say our total population is 1,500. We'll change this a little bit. So we have the upper level and the expected error rate. Well, the upper level essentially is the tolerable difference. So let's say that our tolerable defect rate is 10%, but we're only expecting a 2% error rate. So what we do is we calculate this, and you notice how that the sample size is 48. So we're looking at the sample size of 48, and what it's saying here is because the precision, it's not that close, it's 8%, is we don't really have to inspect a lot. Now, I'll just sort of point this out, is you notice that it says that the interval rate is 31. So basically what this means is if you have a stack of 1,500 documents, is you just go through the documents and pick out every 31st item, and this then becomes your appropriate interval. You can also pick it on a sample basis, okay? Now, I just want to show you how the sampling works. Let's say instead of having 1,500 items, we actually have 15,000 items. But we still have an upper level rate of 10%, expected rate of 2%. We do this, and you notice that the sample size doesn't increase. So what this is saying is that in populations, the way the statistics work in terms of picking the sample is it's not dependent upon the population as much as it's dependent upon the precision, and this precision is the difference between the upper level and the expected error rate. So let's change this now to say 8%. Okay, so we do the calculation here, and actually I want to go back over here. Let's say this is 1,500 items and do a calculation. Error rate too high for calculation, and let's actually do this. Let's say this is 7% and this is 5%. Okay, so we have a precision of 3%. And so you notice how it actually increases the sample size to 499. Okay, we increase this to 6%. Let's see if this works. It's not going to work here. So the precision, you get closer than 2%, it's not going to work. Okay, but again, if we have 7% here and down here we have, say, 3%, you notice how the sample size decreases. And again, this is all related to what we're talking about of the precision, and the precision is the difference between the expected and the tolerable error rates. Okay, so let's go back to the material and continue our discussion. So that's what we're really focusing on, is we're focusing on this difference between the expected and the tolerable error rates, and this is what we've got. Okay, so continuing on here is, let's look at what we're focusing on. And what's very important is we need to understand the environment, we need to understand the population. So what I often recommend that students do, or students or auditors do, is when they get a data file, before they immediately go out and do a sample on it, is they get to know the sample. So the idea is, it's very possible that we may have a population of 1,000 items, but 5 of those items are maybe $100,000, but everything else is less than $20. So the idea is that if there are items with very specific characteristics, it's very possible that we will test all of the items that are, let's say, over a certain dollar amount, and then pick a sample of those items that are below that dollar amount. So when an account or a class of transactions is made up of a few large items, the auditor may examine all the items in the account. But when there's a small number of large transactions making up a relatively large percentage, the auditor will typically test all of those transactions greater than a particular amount. And again, the reason we're doing this is we are attempting to, before we pick the sample, is understand the sample. And this actually is going to be very similar to what we're calling a probability proportion to size that we're going to talk about in a few minutes. But let's continue on here and make sure that we understand what's taking place. And we're going to focus on, let's see what we're going to focus on next. And I think what we're going to focus on next is Testing only one or a few items. Okay, automated information systems process transactions consistently unless the system or program changes. So the auditor may test the general controls over your system and any program changes, but test only a few transactions processed by the IT system. So what are we talking about here? Well, just kind of think about the IT system as processing transactions similar to a mold is building something in a cast iron thing, okay? Well, the issue becomes is if every process, every transaction is treated exactly the same, and we go through a few transactions and we find a reoccurring problem, well, it doesn't really make sense to continue the testing because we've identified the problem and we've identified this problem and we can address it. So what we're saying here is that it's very possible that a sampling technique may not be appropriate when we're actually looking at how an IT system is processing things. We need to understand the controls. We need to do enough testing to understand if in fact the processing is done correctly. And if it's done correctly, then we're good. If it's not done correctly, then it is, then we're going to have to do something about it, okay? Now, we talk about non-statistical versus statistical sampling. I think in the discussion, I used the term probability sampling versus non-probability sampling. And this is what we're talking about here. So when we do a statistical sample, so this is what we see on the right here, statistical sampling is we're using probability, and what we're attempting to do is we're attempting to make sure that the sample replicates the entire population. So the idea being that if you see an error rate in the sample that's 3% or 5%, is based upon the laws of probability, we can then extrapolate that to the entire population and say, yes, the population has an error rate of the same amount. We can do that if we're using a probability or a statistical sample. And that's why we use a statistical sample, is so that we can extract our results to the entire population. Perfectly acceptable process, perfectly acceptable procedure. The issue becomes is it's not appropriate in every situation. So on the other side, we may consider using a non-statistical or a non-probability, or we're calling it here a judgment sample. In this case, the auditor does not use statistical technique to determine the sample size, but what he or she is doing is understanding the determinants of the sample, of the population, and of the risk and what he or she is looking for, and carves out the sample based upon these requirements. And I usually think about this non-statistical sampling from the perspective of we're trying to find a needle in a haystack. Okay? Well, we don't know where it's at, but we know the characteristics of where it probably will be. So we carve out the haystack to a certain smaller portion, and then we look for the needle there. Let's say we find the needle. Well, we found the needle, so we did what we needed to do, but we cannot extrapolate those results to the entire population. And this is actually one of the things that many auditors get confused with, is doing a judgment sample is perfectly acceptable, because what we're looking for, and usually you're using this for control testing or fraud testing, and we're looking for very specific characteristics. Well, the issue becomes is once you've done that, once you've set up all these delimiting factors, and you've got that population to a workable unit, and we test that, that unit that you're looking at is not reflective of the entire population. It never was intended to. So it would be inappropriate to extrapolate your results to the entire population. An example of this is, let's say you suspect that transactions are not being performed correctly on Fridays. when Sally is working in cash disbursement. Okay, so if you look at the entire population, you might pick up a transaction that Sally is doing, but that's not really what you're looking for. You're looking for those Friday transactions when Sally is in the office, and the reason you're doing this is because you suspect that something is going on Friday when Sally's in the office. So we find that, and we draw our conclusions based upon the testing, but the idea is that then we can't then take those results and extrapolate those to the entire population. But we may have found our criminal, and that's really what the intention was. So in our sampling, we want to determine an effective sample. We want to measure the sufficiency and the quantity of this sample. And the idea is that in a statistical sampling is we really are trying to carve out a piece that essentially replicates what's actually taking place in the entire organization. Now, when we're looking at some disadvantages of statistical sampling is there clearly does need to be training involved, and training primarily to understand the population. There's a cost in terms of developing the sample, and it's very possible that there might be a lack of consistency across the audit teams in terms of how they actually pick the sample. The other issue becomes is if you, a lot of times you're picking a sample from documents that are not necessarily easily determined in terms of size and so forth. So sometimes it's less than a perfect system in terms of what we're attempting to do. Okay, but again, that's where sampling risk becomes a part of this. Okay, so we're going to talk about a couple of items, and we're talking about these items from the perspective of statistical sampling. So statistical sampling is where we are attempting to replicate the population in our sample. The first thing we want to talk about is attribute sampling. A student asked me about attribute sampling, and let's just talk about this. Well, attribute sampling is used when we are testing internal controls. So when we're testing internal controls, the thing that we need to understand is what are we actually testing? Okay, so as an example is what we're looking at here, and I think part of the screen actually I got lost, but the idea is that these auditors are looking at documentation and they're saying it's based upon the internal control structure, every check needs 2 signatures. Okay, so the attribute is 2 signatures. So what we as auditors are going to do is to look at a sample of checks and determine if in fact every check has 2 signatures on it based upon the policy, and that is the attribute that we are looking at. So the attribute testing, and to visualize, it's going to be, is it effective? Is it working? Yes or no. So the attribute is what is it that we're testing, and we're not testing monetary amounts. We may be looking at checks of a certain size, but we're not relating this to monetary amounts. It's just we're looking at a specific attribute on a specific document, and this attribute validates that the control is working. So 2 signatures on a check is an attribute. Okay, so I guess these things do show up. Okay, the entity's control requires that all checks have 2 signatures. Yes, we know we're planning a control test of attribute sampling. Okay, so if you go to your books, some interesting stuff here related to how do we actually accomplish attribute testing. Well, the first piece is we need to understand what the objective is. Okay, so the objective is obviously testing controls, but you notice here is what is the population, what is the acceptable parameters. So the population, the parameters, and the objective, highly critical. So the idea is that if we don't understand what validates that the control is actually working. So it's pretty easy in terms of 2 signatures. In other controls, what we're looking for may or may not be as easy to determine. But that's what we need to determine, because we're looking for a specific attribute, and within this attribute is what we're attempting to do is to determine whether or not it's functioning. So we're looking for a yes or no answer related to this attribute. When we look at the control deficiencies, is we need to, and I'm looking here on page 11.5, is carefully define what is meant by a deviation from the prescribed control. That is the control attribute of interest. So it's important in as carefully defining the control objective and the control procedure. So what we're looking for is, what are we looking for within this thing that we're looking at that essentially validates that the control is working or the control is not working. Defining the population, absolutely critical. So what we're looking for is, if, especially in internal auditing, in financial statement auditing, it's actually pretty easy. We're looking at the financial statement year. But in an internal audit, we may be looking at 3 months or 6 months, whatever it is. We're simply trying to identify a population. The acceptable parameters, again, we're looking at the risk level, the tolerable, and the expected rate of deviation. And here I'm just going to read a couple of things related to this on page 11.6. Is in attribute testing, the internal auditor must specify using audit judgment the appropriate value for 3 factors affecting the sample size: the risk level, the tolerable deviation, and the expected deviation. Note that the sample of the population has little effect on the attribute sample size, which we saw that is going from 1,500 to 15,000 really didn't affect the sample size. So the statistical deviation table presented in Exhibit 11.1, basically it's exactly the same thing that we do when we're doing our ACL, is we're actually able to identify the sample size based upon this. Okay, select the sample. Let me actually show you what we can do with ACL. I'm just going to go over here and forget about this. But let's say we have a table here, and if we want to count the items, data, let me just see how many items that we have here. Analyze, we're going to count records, and we have 152 records. Okay, so 152 records. So what we want to do is we want to pick a sample. So let's say we want to pick a sample of 25 items. Okay, I don't know why we're going to pick 25 items, but we're going to pick 25 items. So we're going to sample the records. We're doing a record, and what we're going to do is random. Well, we have the population of 152. Let's say we're going to do a sample of 25. Seed is just a random number that we'd be interested in just plugging in. That's kind of like your starting point in terms of picking random numbers, sort of a statistical thing. And then we want to put this to a sample. We run this and override. Yes, we're going to override this. So essentially what this did is this picked out 25 items on a random basis. We can then take these items and look for these in our records. Okay, so that's kind of a neat tool with ACL that becomes very helpful as you are picking samples. Okay, so we talked about attribute sample. We've done this slide. We've done this slide. Let's talk about monetary unit sampling. Monetary unit sampling can be used for both our substantive testing, where we are measuring monetary misstatement, not so much done in internal auditing, but it's also part of what we might do as attribute sampling. So essentially what we're looking for is we're looking at our population, and we're considering the population in terms of the actual dollar value of the items. So let's say we have a very large range of dollar value. So we have $1 million items and we have $20 items. Well, we don't necessarily want to give a equal weight to the $20 item as to the $1 million item. So what we do is we create a sample based upon what we're calling a monetary unit sampling, and this is basically a probability proportion to size. So what we're doing here is, instead of looking at the individual items as separate items that we are going to test, is we look at the total dollar value. So let's say there's 1,000 items. Well, that's not our population. Our population is the fact that the total dollar value is, say, $10 million. So we then pick our sample based upon the $10 million as opposed to the 1,000 items. And what this does is the probability of being picked is proportioned to the size of the dollar value of the individual items, which is very important, because what this does is that it gives you some assurance that as you're picking these items, that these items are relevant in relationship to the entire population. Okay, classic variable sampling, very easy concept, is basically what we're doing in terms of determining every item is going to be picked based upon this probability. So some classic sampling techniques is to estimate the dollar value of classes of transactions. It's more frequently used to determine whether an account is materially misstated. So let's talk about, for the next couple of minutes, is what we call our non-statistical sampling. And again, this is probably the area that we're going to have our most impact in from an auditor's perspective, is because primarily the work of the auditor, the work of the internal auditor, is related to internal controls. So non-statistical controls, non-statistical sampling allows the user the use of random or systematic selection, but also permits the use of other methods such as haphazard sampling. When haphazard sampling is selected, sampling units are selected without any bias, that is to say, without any special reason for including or omitting an item from the sample. So, and I've done this with, I'm trying to think of some items that I actually used some sort of haphazard sampling technique. So one time I was doing an audit of registration, and I'm sure I've told you that my background is healthcare. Well, the registration was basically a manual process, and at the end of every transaction, a patient visit, is there would be a registration form. So the registration form, it was like a 2-copy item. One copy was given to the patient, the other copy was maintained as a file. And I kind of forget what we were actually looking for in these registration forms, maybe completeness of this, or maybe what we're trying to do is we're trying to then take these the items that were recorded as being completed and make sure that they were billed appropriately, whatever the case may be. Well, the issue becomes is we got a stack of paper, and we're talking maybe a stack of paper that is maybe a foot thick, and it's pretty hard to figure out how many items are there. The way they did the record keeping, it was pretty hard to figure out what period of time, the exact period of time these items were at. But we just wanted to sort of get a very good beginning understanding of what's taking place. So we used a haphazard sample. So basically what we did is we said, you know what, we're going to pick 25 items and just go into the computer and see what we see. And so what we did is we took randomly into the stack of paper and pulled out an item. We went in there again, pulled out an item. We did that 25 times, and then we simply used that information. We went into the computer, and essentially what we're attempting to do is to understand how the information was transposed from this form into the computer record. And we're basically just really trying to gain an understanding of the process. It was non-statistical. It was simply haphazard. We didn't have any statistical means of determining if our sample was appropriate to the population, nor did we have any sort of justification for the items that we picked. But we picked them, and it then became sort of the basis for understanding what was taking place within these accounts. Okay, so let's just make sure that we understand just a couple of concepts. And one of the things that we need to understand as we're going through sampling from an auditor's perspective is sampling from an auditor is we're never going to be statisticians. Okay, so I'm certainly not a statistician. Maybe you are, but I certainly am not. But that doesn't preclude us from actually making sure that we're making good decisions related to our sample. Okay, so the good decisions that we're going to make is, number one, we're going to determine what is most appropriate. Well, for test of controls, it may in fact be appropriate that we are trying to replicate the entire population, that we may be trying to replicate the entire population in our sample, and if we're doing that, this is going to be a probability or a statistical sample, and we pick our sample so that the sample replicates what's going on in the entire population. Certainly is appropriate for many types of testing that we're going to do, but the other testing, the other sampling that we're going to do is going to be this judgmental or non-random, non-probability sampling. And in this case, what we're doing is we're carving out the population, and based upon this population is determining what is the most appropriate area to focus on based upon our judgment. So it really is a judgment sample, and it's based upon, again, what the issues are as to why we're starting the audit. Again, maybe we're looking at transactions at the end of the day, or looking at transactions that occurred at a specific point in time or by a specific person. Perfectly acceptable, and our results are certainly going to be valid for that specific area. The issue with non-statistical sampling is you cannot extrapolate the entire, from the sample to the entire population. You can only extract the sample to the sample. So our results cannot extend beyond the sample when we're using a non-statistical sampling method. Okay, so in any event, those are the sort of the hardcore items that we need to understand specifically related to sampling. And I certainly appreciate everybody's time and attention this evening. So everybody have a wonderful evening. I'll hang around just for a minute or two if anybody has any questions. Otherwise, I think we have our next lecture is going to be, I think it's going to be in 2 weeks. I'll have to check on that. But in any event, and then I'll clean up the exam. I'll make sure that that gets available in some form or another. And I'll certainly give you plenty of time to actually do this. Okay? So everybody have a wonderful day, and we will talk to you shortly. Okay?